The broadcast is now starting. All attendees are in listen-only mode.
Hello, Pace. Good ECB day for everybody. How's everyone doing? Hello, Pete. Pete from Wales. Nice to meet you. Okay, so I'm sure the team is going to fill us in with the statement, and Draghi, if he has a presser, will stay in touch with that. I know Stelios will do it, keep us informed. So, you guys know I've been negative the dollar. I covered him up yesterday and thought I'd have potentially another rally to sell in the Dixie, and it could still happen. I'm looking at this level. Maybe we get some type of ABC. I wouldn't want to see the dollar close above it. Still think there's more left to the downside. So the parallel would be, say, for example, the euro, which, we talked about it down here when the DSI was 16.18. And this is really kind of an important level, this 1250 level. But it looks like we're going to try and take this out. As you could tell, we have 1, 2, 3. And I've been talking about the potential of the dollar. If we're not going to get that pop for me to re-enter, which happens frequently, I usually like to at least keep a piece on, but in front of red events, call me chicken. I say it's prudence over valor, that it's kind of binary. I'd rather react to it. And at times, the reaction would have gone the way I was positioned into events like the Fed and NFP, et cetera. So if we're not going to get this rally and we're just going to continue lower from here, I have some targets down here in the dollar, down around this 96.30 level. Actually think that there's a chance that we even get a full-blown retest here. That would take the euro up towards 114. The bullish argument is that we hold in here, and we have two tops here, and we start taking out this trend line. The next target should be high the move and a breakout, right? So, and a lot of people thought it was going to be a layup a week ago, and so far they've been, the goalie has stopped them, or in basketball season, they were stoned going up for a jump shot. But we start taking out 97.20, then you have 97.43, and then you're going to have your breakout over 97.80. To me, it looks 50-50 here. Although, if news took the dollar higher, I would fade it today. Yen, too, still looks very anemic. The action in the yen, at least right now, there's nothing positive about this action after a big break of support at 1120. So we're just there. So just like I would sell a rally in Dixie, I'd sell a rally in yen. If we had a pop up here, we'll see how the news works out. And this is something I'd like to see have one more pop. And that's accrued. We finally had a 1 hour divergence here. Must have been yesterday or the day before, and came off. As you can tell, the 4 still has tremendous momentum. This reading up here is going to take a little time to dissipate at 77, but I'll take a shot in crude if we get one more high up here, take out these highs, maybe trade 64, 70, 80, whatever. Just take out these highs, and if the RSI is not trading over 70 when that happens, and there's a good chance it won't be, think it's worth a shot selling it up here. I remember talking to Greg last week, and his targets have continually been moving up with the flow of the market. And I think he said 64, 65 last week. Great call, Grega. Nice call, Wizard. And so, up there, I'm going to give it a shot for at least some type of scalp. What would change the picture is here, right here. Getting back under this throwover line would do it. So that's going to come in right around the 62 range. You have to keep extending it out. About 62.40. And you also have a moving average down here. And here's a big picture of that throw over. Hell of a throw over. I know because I tried it here. I waited for weeks to sell it here. I sold it here. And I like to do postmortems. The minimum thing I should have done was get out of the way. And now, this RSI reading was pretty strong, should just reversed. And then to show you that this line has meaning, you need reactions off lines to tell you whether or not they're relevant. Hi, Craig. Right here. So then after we had the throw over, we pulled back to the wedge line and headed up again. So any closes, it looks to me like under 62.20 or so. And a close, I mean, a closing candle like a daily, 4 hour, something, not just penetrating it. And something I've done a billion times, I have to remind myself, and I'll remind you, um, you don't know what kind of candle you have until it closes. So how many times have you anticipated how a candle may close to try and get an edge, and it ended up not being the kind of candle that you were anticipating? I'm not saying I'm not going to try it because it gives, keep trying it because it gives me an edge. But you know what? You're better off just not trying to be Nostradamus and predict a candle's close and let it happen. So when I make the same mistakes again, I want to share them because I figure if I'm doing it, I'm not the only one doing it. Anyone ever do that? You have a trade and you're expecting some type of candle, and maybe before the time period, the time frame of that candle wasn't complete. It looked like it was going to happen and then ended up being the opposite. Give me why if you've experienced it. Okay. We have many disciplined traders in here. Craig has experienced it. So write it down. You don't know what kind of candle it is until it closes. Wait for the close of a candle. Okay? It's Forrest Gump stuff, but you'd be surprised. The simplicity and Forrest Gump, uh, simple. I love that song, Simple Man. Keep your trading simple. Have a few important rules, and you'll integrate them into your methodology if you see them. So you write them down, and eventually it'll just be second nature. But you have to see it to change your paradigm. It's about repetition and seeing it and doing it and seeing it and doing it. So that's the end of my coaching here. Interested in what the team is thinking today, and I get up at I don't know, 3:34, and it takes me about 30 minutes to get the cobwebs out and have a cup of coffee and scan the markets and see what's happening here. So I tell you, it's great to be part of a team that if I can't cover something, the intelligence gathering I get from the team at ForexAnalytix is just unbelievable. So, if I really need to know what's happening, and don't have much clarity, it's only a mouse click away for me. Should be a mouse click away for you too. So we're they're talking about ECB and Fed policy diverging here. Some weekly look, some shorter term stuff, and if I want to see the higher conviction besides just analysis, the team has to have pretty high conviction to put out a pattern in play. Okay, so I'll just go and see which is what they've done, if they've closed any out, and then I know what the team is thinking. Now I know there are other things that they're providing analysis for. And, I follow a lot of things, but you can't trade everything. So, the highest conviction views for the ForexAnalytix team are patterns in play. Okay, so if you're, pressed for time and you don't want to go over because the research is just, I don't know if these guys ever sleep because, they're updating all time frames, they're doing push alerts, and Really feel fortunate that I found a niche where, I don't know if I would have the stamina to do what these guys do nowadays. Okay, so um, it's the best deal on the street. And I've talked to a few people. I know I've told you about Ronan, but uh, also another friend of mine, Dan Nordoff, who used to be in other rooms that I was in. Uh, I said, "Wow, Dan, you're a very good trader, very consistent." You know what? He said, "I learned most of what I know from Blake." Okay, and that's just hanging with Blake. And so, that's a couple of people. I'm sure we could put some zeros on that, but Blake's here for 20 minutes, right? Gives you a rundown. You want to hang out with Blake, you need to become a member and go to the chat room during, after face, in the evenings. And Paulie's there before the U.S. is even out of bed. And, these testimonials are from people that I know and I've seen them trade. And whoever they learned from, they're good. And I didn't ask them; they just told me. So, Blake, you've helped a lot of people over the years, and probably many you don't even know that you helped them.
Well, I'd like to think that that we provide some assistance because trading the markets is not easy. It's definitely not easy in this environment. I mean, when we're currently dealing with the very low volatility, but just a little bit of guidance so you can have an idea of what people are thinking, or at least people that like myself or the rest of the team that have been in the industry for years can kind of cue off of. I mean, if you're just starting trading, like right now, it's challenging. It is. I mean, it's challenging for me, so it's really challenging for anybody who's new. And then on top of that, trying to understand what's happened overnight or what's happened just in general, what macro themes are got a stranglehold on the market. Those are things that take some experience, take some research. We try to cut all that out for you, so hopefully we help out the individual trader. And I think I'd like to believe that we have over the years, and that's one of the things that I love doing what I do. It's not just giving it to you. A lot of it's selfish too. I mean, Dale, I get a lot out of kind of saying things about the market, giving everybody an update.
Yeah.
What's that?
And having people react to it.
Not necessarily react to it. It's more of like if I get to say why I'm feeling the way I'm feeling, it helps me shape my
Right.
ideas
Okay.
about like have a
I understand.
you understand what I'm saying. It's
Yeah.
like I can
It
verbally.
crystallizes your view because you're verbalizing it. It's not just thinking it; you're saying it, and when you hear yourself say it, it's self-talk in a way, Blake.
It reinforces those
Yeah.
ideas to myself. So, and then I tend to act on them. So if I tell you, like right now, for example, yesterday, let's just talk about yesterday. Yesterday, you're like, oh, I'm bearish the dollar. Okay, you're like, I'm expecting the dollar to move lower, and I'm like, I wasn't as bearish the dollar. I was like, I'm actually looking for it to be bullish here. But the fact of the matter is, getting up this morning and the euro trading up towards this back up towards its highs, I am thinking myself that, hold on, let me turn down my speakers here. Give me 1 second. I was thinking to myself that that the euro is holding up very well, and while the euro is above this 112.50, I can't really be bearish. We get below 112.50, that means that the market was pretty, the ECB president's pretty dovish, and then the market's like, well, all right, that's it. But if we get above this 112.85, this is the 38% retracement. I have no choice at that point in time to be bullish the euro. knowing that everybody's short. Now, if you want to see what happens when a central bank does not meet the market expectations, go take a look at the Aussie last night. The Aussie dollar, if you're wondering why the Aussie dollar screamed higher, about 8-9 hours ago, that's because the deputy governor from the RBA just wasn't that dovish, and the market was hoping he would be dovish and wasn't. So the Aussie screamed higher as a result. That same situation can happen here with the euro. The market's expecting a dovish Mario Draghi. If Draghi is not dovish enough to meet market expectations, hey, we're gonna have a rally in the euro. We're gonna start squeezing. Remember, the market's pretty short the euro. All right, so does that make me bearish the dollar overall? No, not really, because I still look at the dollar and still believe that we're in a longer term. Let me just grab the pen really quick so I can. So I still think that if we can't play out in a bullish fashion here today, if that doesn't work, then unfortunately we're probably still stuck in this wedge that might have a little bit more consolidation to go. So that means that I could be bearish the dollar at least today. I don't know if I'm going to be bearish the dollar overall, but I guess the point I'm trying to tell you, or the point I'm trying to make at this stage, guys, is I'm not married to any bias, and it's important for me to tell that to you guys, because it also reinforces that to myself when I trade. Because just so you guys know, I typically will do, unless something changes intraday, I typically will do whatever I told you guys I'm going to do on this webinar. So for example, if I said, if I said, look, I'm gonna get long the euro dollar if it closes above 112.85, or if it stays above there for any period of time, like for an hour or so. If the euro dollar gets above 112.85, I'm gonna play it on the long side, and I'm gonna look for a move back up to 113.30. Fact of the matter is, that's how I'm gonna play it. Unless there's something that's said between now and the time that this happens, like there's some sort of tweet from President Trump, or there's a headline from the ECB that tells me I should be doing otherwise. Typically, I'm going to do whatever I said I'm going to do when I'm here. So what it does for me verbally, as Dale said, I kind of reinforce everything when I'm on here on the webinar. Reinforces my thinking on how I should be approaching the market, and that's a fact. If I say, hey, I'm buying the Aussie New Zealand when it dips down to 104.50, 104.40. Well, that's what I did. I picked up I sold Aussie New Zealand yesterday, a lot of it at 105.90. I picked it up last night at 105.50, and I had more to buy at 105.40, and I missed it by a couple pips. So my bigger position was down here at this trend line. I missed it. Unfortunately, I was at a ballpark, but for my kids' baseball. But I ended up getting a small piece, and then exited out this morning when it was back up here in the 80s. So I let everybody know in the chat room, in our ForexAnalytix chat room yesterday. That's what I was doing, is I was buying Aussie New Zealand on this dip, and I picked it up. But see, doing that, whether it's on the webinar or whether it's in the chat room, it helps me reinforce my thinking, because that it makes me more accountable, if you will, and it's good because like intraday. If, like, let's say I'm like, okay, hey, I'm bullish the euro dollar while we're above 112.50, and that is my stance, by the way, just so you guys know. As long as we're above 112.50, I'm not shorting it. I'm just telling you guys right now. Intraday, like if I was sitting here right now and I started shorting the euro dollar, I would start thinking, and let's say it's half an hour from now, and I was shorting the euro dollar and nothing changed, I would be thinking to myself, what am I doing? Why am I short the euro dollar right now? I said if it's above 112.50, it's bullish. Then I'll immediately get out of it, or it prevents me from shorting the euro dollar because I told you guys, hey, while it's above 112.50, I'm going to be bullish, and so that actually helps me a lot because it prevents me from making stupid mistakes throughout the course of the session. Which, hey, I'm human. Believe me, I've made my fair share of stupid mistakes trading. Most of it comes with lack of discipline, and all of us need to practice good discipline in this environment. This environment specifically, we need to have very good discipline. So anyway, I just got on.
Why more now, Blake?
Because the market's not moving. So, and here's another fact, and this is really important. This is when I was talking a couple of weeks ago for my quarterly review with Gellos Capital. We were talking about how challenging the market is, and we were discussing about, look, we have to, when we're right, we have to try to ride them out as long as possible. When we're wrong, we can't stay wrong. And this is a targeted entry environment, because if you can't get yourself in too much trouble, because if you get in a losing trade and you end up holding a losing trade for an extended period of time, the chances of you being able to make up those losses is very small in this environment, because we don't have a lot of opportunities to make money in this environment.
What
so
a
that
pearl.
means when you're wrong, you can't stay wrong.
That's
Look,
why I asked you why, bro.
Yeah,
Okay?
and I know you're yanking for you're pulling for an answer, and it's fine, and that's great. That's what makes you the hostess with the mostest. But let me also explain to you guys that one of the problems that most retail traders have, and this is a big problem. This is why most people fail. I'll plainly and simply put it to you right now. This is why most retail traders fail, because they do not believe they are wrong. I make trading decisions all day long. I'm wrong all day long. It is okay to be wrong. It is not okay to stay wrong. Understand that. If you're wrong, get the hell out. You're wrong. You made a mistake. Get out. It was a bad decision. Get out. Minimize your loss, especially in this environment. All right. So it's okay to be wrong. It's not okay to stay wrong. It's a big, big deal. If I'm wrong, I just get out and say, hey, scratch it. Let's move on to the next one. All right. All right. So real quick, I know there's a couple other things that are happening with the we have CPI that's happening. And by the way, I think if the CPI number is weak, you got to start looking at the euro dollar, because if the euro pushes up against this resistance, and then we have not so dovish Draghi, that could be a double whammy for the euro to go higher. If the CPI data is strong and we have good, solid inflation, then you got to take a look at the dollar yen. I think the dollar yen is actually holding up pretty well. We have this, head and shoulder pattern right here. You guys can see it. We're not really going down. Equities are not going down. Dollar yen's not really going down. I think if we have some strong inflation data, this could squeeze higher a little bit, up here like that. But if the inflation data is weak, I think we got to continue to look at the euro as a possible bounce here. We also have the FOMC meeting minutes today at 2:00. It's the meeting minutes. Remember, the Fed has made a more dovish shift here, so just keep that. If you're trading the dollar and you get into a position following the ECB, I don't care what it is. The euro drops. Whoops, I didn't mean to move that. The euro drops below. The euro drops below 112.50, and you decide to short the euro fine. If the euro gets above 112.85 and you decide to get long the euro, fine. But don't forget that there's the FOMC minutes later today, so don't get too married to this position. There may be more volatility to come later today. So I'm just hoping for volatility to explode through the roof. One of the other things I want to point out is the volatility index actually has been kind of sneaking higher the last couple of days. The VIX is firming up a little bit here. That doesn't necessarily mean anything at this moment, but just watch volatility, because if volatility starts to creep up here, that means equities will come under pressure. So just I should probably move this. I haven't looked at it in a while, but I mean on the webinar, but I just want to point that out. All right, guys. So
see that one candle down there that it went to 12, it spiked down there, and that one. It was kind of a ghost candle.
Yeah.
It's almost like pros just put out their offers. There were no bids, so they could buy it down there, because it's like what happened in the flash crash in December. And
I wasn't watching
volatility
that day. I wasn't watching it that day, but it's entirely possible for sure. For sure.
Yeah, I mean, people had stops at 12, at under the previous low, and they took them out, and that was it for a second.
Right. Hey, one other trade, just in case you guys aren't looking here. I know I'm long, and I'm bullish to Aussie New Zealand. Yeah, but let's say the euro continues to rally here. You gotta watch this euro New Zealand. This thing's got a big inverted head and shoulder pattern. It points way up here. Yeah, we got a little pennant that's trying to break to the upside. I like it. And like I said, if the euro gets a bid today, the euro starts, screaming towards 113. You turn your attention to the euro New Zealand as well. It's not just, you could say, oh, the euro dollar is so frustrating. Well, go trade a cross rate. I've been trading a lot of these exotic crosses because, the majors just aren't moving anywhere. So anyway, just some food for thought. And good morning, Steve. How you doing?
Good morning, Blake. I'm good. How have you been?
Good. Stelia should be here too, right?
I am.
Oh,
Hello.
yes.
Good. So I'm gonna pass it over to you guys so I can get ready for CPI and the dragon. So,
Yeah.
so
release the dragon.
release the Kraken. All right. So you guys, good luck today, and I'll look forward to seeing the rest of you guys in the chat room. And remember, if you're looking for a broker, or if you're not part of the reimbursement program to get ForexAnalytix, possibly for even free, make sure you visit our partners, Forest Park FX. You can find them right on our website under the reimbursement program tab. Make sure you check. Yep. Make sure you check them out and chat with them. Their contact information is right there. All right. Thanks, guys. Have a great one.
Good hunting, Blake.
Thank you, Blake.
Thanks, guys.
Good hunting indeed.
Couple of things before we get the CPI.
Absolutely.
Yes, data-wise, we had Norway CPI came in slightly higher than expected, 2.9%. So it's sticking around 3%. Norges Bank had said previously that inflation may be temporary. Well, it's sticking around 3% for some months now. So the kroner predictably is strengthening after those numbers, which I personally like. And okay, so that was one thing. Then we had the ECB obviously leaving rates unchanged, and the press conference is the big thing to wait for. But they did say that they're going to reinvest the QE debt for an extended time after the first rate hike. This was I actually chuckled when I read that, because when is the first rate hike going to be? In 2-3 years? I don't know. So I mean, the market's still.
At still some point, like 5-6 years after the next recession.
Yeah. But anyway,
so
whenever that is.
Hold your horses.
Yeah. So, I mean, the pressure is coming just a few seconds, actually. And we also need to remember that theoretically in 2 days' time, the UK is leaving the European Union. I think we all know it's not going to be leaving in 2 days' time. And sterling has been surprisingly quiet yesterday and today. And the most likely event, according to the market, is going to be another extension, maybe end of May, end of June, end of year, end of our lives. Who knows? So that was data-wise. We did have some UK data which came in stronger than expected, but really this might be again the stockpiling. Manufacturing production was stronger. Ahead of Brexit, a lot of the data is going to be a little bit.
Trade balance was worse, though, right?
Yes. Okay. So numbers, we have CPI coming in. core CPI is weaker. CPI is slightly stronger. So, CPI
Core CPI 2
0.1
versus 2.1, and CPI 0.4 versus 0.3
net,
month
I
on
think
month.
it should be doing absolutely nothing.
more or less. It's a
Well,
non-event.
the euro is five pips higher, but really not that much happening.
Indeed, I think nothing is going to happen ahead of. I mean, especially having to do with the euro, I don't think that anybody's going to jump on any trades, before Draghi starts speaking, Stelio.
Yeah. I'm going to keep an eye on that for sure.
When's that start?
Now.
Any moment now. Any moment. I have the TV on. He hasn't started speaking yet, but it should be like within 2-3 minutes.
Yeah. Well, he's waiting for us to finish with our.
Absolutely.
I hope no one throws. I hope no one throws popcorn on him today.
He told me to send him an SMS when we're ready.
I remember the one with the lady who jumped on the.
The lady who jumped on the table.
And the confetti, right?
Oh yeah. See, I thought it was popcorn. Okay, yeah, that's what I was talking about.
It would be nice if it was popcorn. At least you would be able to do something.
I'm always thinking about food, bro.
Yeah. The other thing.
I can't blame you.
He ducked. Yeah. It scared him. Confetti. Yeah. So if confetti scares a central banker, why should we fear them? That's all I could say.
So one more thing, actually, we were talking about Italy yesterday, and we did when they actually revised the GDP forecast lower from 1% to 0.1% for this year. Well, guess what? They revised their budget deficit higher from that 2.04%. I have no idea.
2.5.
To 2.4, I think, was it? But anyway, they revised it up to the number that the ECB was not happy. The Europeans were not happy with to start with. So
they're even more unhappy with. Yeah.
So there you go. So that happened as well, and I think we could all see that coming, really. And that is it for now. I'm going to keep an eye on Draghi, and
they're just gathering up from what I see. So they're about to start. So Draghi's, he's going through his papers. So any second now, Stelio, he's going to start talking.
Okay, excellent.
I feel like we're on trading places waiting for the OJ report.
Let's hope that we are not Clarence Beeks.
Or the Duke brothers. They kind of took a hit on that.
Oh, what did you remind me of? Duke brothers. That's like a century ago, right?
Oh yeah.
I was like a kid when I was watching that play.
Oh, don't rub it in, Steve. Okay.
Really young.
I was already 45 when the movie came.
No, I'm not talking about the movie. I had finished school, I think, when the movie came. Yeah. I'm talking about the series. They were like played from the national broadcaster here, like when I was a kid. Okay, Draghi has started speaking, Stelio. So okay, let's keep our eyes on. Okay, I'm gonna stay on 4-hour charts, to be able to see more of a movement. This is Euro Swiss, by the way. This was a nice trade. We talked about it. Nice descending wedge, nice breakout following this channel to the upside. This is the inverted head and shoulders on the 4-hour chart for the Euro USD. Also monitoring this descending channel. Keep in mind, 113, quite an interesting area.
1 hour candle in Euro looks kind of negative, Steve.
Yeah, but it's too early. Let's give him some time. What I like the most
candle then close, right?
What I like the most still, if we get Euro strength is use the Swiss still looks like it's in a corrective rebound here. So use the Swiss is one of the things that has prevented me from turning bearish the Euro USD, because this formation in the USD Swiss looks quite corrective for the time being, and we're currently testing also the 50% fib of that last move lower, monitoring this channel as well. So let's see what's going to happen from here. And finally, Euro yen. Stelio, interrupt me at any given point, of course, right?
Of course I will.
Euro yen still within this descending channel, but on the other hand, still remaining below this ascending channel. So it's a matter of what's going to be the trigger here. One thing is for sure, 125 is strong support. If we see a break below 125, we should see continuation lower. On the other hand, 125.60 strong resistance here. So 125, 125.60. I wouldn't be doing anything in between. But when we take out one of these two areas, we should see some follow through. Let's go back to the Euro USD. Anything interesting so far? Euro USD actually reversing from the 38.2, as you see here. So far, this 4-hour candle has turned to a shooting star, but of course, too early, and it can turn around once again. Depends on what Draghi says or how he answers the questions. Details on
Draghi did say, by the
TLTRO
way, yes, exactly
to be
that.
communicated in the future, from what I see.
Yeah, and then in the next meetings, he said so.
Yeah, TLTRO details to depend on economy, transmission. Some factors damping growth are fading. So this is more or less, a little bit of a hawkish hint, in comparison to what we've heard in the recent past. I mean, it's not that it's anything hawkish, but in essence, he says that some of the factors that are keeping growth lower seem to be receding. Anything else, Telio? Further employment gains and rising wages continue to underpin the resilience of the domestic economy and gradually rising inflation pressures. So far,
he's trying to keep a balanced. He's putting some hawkish notes in there for now.
Yeah. So far, he's putting some little hawkish notes, but so far, the market doesn't seem to be reacting to that, which is kind of weird because the market was definitely expecting once again a dovish Draghi, and so far, Draghi hasn't given us anything really dovish. In the context of our regular assessment, we will also consider whether the preservation of the favorable implications of negative interest rates for the economy requires the mitigation of their possible side effects, if any, on bank intermediation. Okay. The pricing of the new TLTRO3 operations will take into account a throughout assessment of the bank-based transmission channel of monetary policy, as well as further developments in the economic outlook. So, they're not willing to give more details about the TLTRO. They're very, very vague about it. We continue to expect the key interest rate to remain at their present levels throughout the end of 2019. We had already heard that. I doubt it that it's going to be only by then. An ample degree of monetary accommodation remains necessary to safeguard favorable financing conditions and support the economic expansion, and to ensure that inflation remains on a sustained path towards levels below but close to 2% over the medium term. The over the medium term perhaps puts a little bit of a dovish hint there, like they would be able, as the Fed has said, would be able to, in essence, accept even overshooting the inflation target in the short term. Significant marginal position is being provided by a forward guidance on the key ECB interest rates, reinforced by the reinvestments of the sizable stock of acquired assets and the new series of TLTROs.
He said that we're ready to adjust all instruments as necessary, which
we've heard that a billion times.
Without saying, right? I think overall is actually neutral at the moment.
Yeah, it's more or less neutral so far. That's actually true.
Yeah.
That's okay. Of course, Telio, we can't price in what's coming on with the new TLTRO. So that on itself, the fact that we have no,
two more headlines. Temporary factors are longer lasting than anticipated, and the risks are still tilted to the downside. So he's mixing it up for sure.
He's mixing it up now. Yes, indeed. Yes. Incoming data continues to be weak. That's also so he's mixing up. Yeah, he's actually sending mixed signals. And so far, that's why probably so far the Euro USD is not really reacting. I mean, the Euro USD is almost unchanged from when this 4-hour candle opened to now. So so far nothing to write home about here. We have to give it a little bit more time for the market to digest all those headlines and decide which of those are more important. Now, as we said though, there's this big question mark. What's coming with the new TLTRO? Because that can be like from very dovish to more or less insignificant in influencing. Stocks continue to it's a bit draggy risk to
S&Ps
euro.
are giving up early gains.
Yep, S&P has turned to
So
a little
higher, but
shooting star on the 4
yeah.
hour. So far, this little rebound on the 4 hour chart does not look like an impulse. So, I would say that there is a decent chance that we're going to see at least one more little leg lower from here.
Maybe that was it last week or early this week, Steve. That too.
We'll see. I mean, we respected this ascending wedge and this nice RSI divergence so far. But let's see, 2870 is going to be an interesting area of support. We definitely need to break below that for us to start thinking that something worth talking about might be brewing here. But until or unless that happens, we don't have enough evidence to call for some kind of a bearish reversal. Besides the fact that we have.
You've mastered Tom Petty's song, "The Waiting is the Hardest Part." You're one of the few guys I know that really, is relaxed during the waiting phase.
No, it's okay. Sometimes I'm also jumping the gun, but I know my risk, so I'm still relaxed. If I'm not relaxed, I can.
And it's the hardest thing, Tom Petty, in life, and not just trading. The waiting is the hardest part.
I actually used to be extremely impatient when I was younger, but that's one of the things you can work on. By the way, USD yen also
I'm still working at it.
Also this rebound here in USD yen.
Yeah, it's weak, isn't it?
It is weak. So if I see this rebound on the 4 hour chart in the USD yen, I have to say that it's more likely to see continuation lower than not from this. So far, it looks fine for it to be a bear flag. So it can actually end up being a bear flag with implications being for lower prices. I'm monitoring this ascending channel. So let's see what's going to happen if we get down to testing that. So definitely, so far, Draghi hasn't done much to help this relentless stock bid. I mean, his statement more or less, was balanced. I mean, it had several dovish lines, but several, neutral or positive lines. So far, the ECB hasn't given hasn't thrown a bone to the market, for risk on so far. Mildly expansionary fiscal policies support economy. That's another statement from Draghi, which can also be a little bit interpreted like a little bit of a hawkish in the sense that he's saying that some of the weight is being pulled by expansionary fiscal policies, perhaps meaning that they feel less important to be as supportive with monetary policy since fiscal policies supportive. And that's it, more or less. I mean,
he did also say that inflation is likely to decline in the short term, in the near term. So, and risks are tilted to the downside. So he doesn't look at inflation turning anytime soon, which
to the upside.
Yeah.
Okay. So, having said that, his prepared statement is over, and the Q&A is going to start now. Let's see if he's going to have any interesting questions coming his side. The good thing is that we don't really need to jump on other things, that fast, because since yesterday that we had a look at them, it's not that we've had any big movements. The past few days have been, for the vast majority of pairs, rather boring. Euro USD is actually at the lows now. You can see this 4 hour candle is pushing to lower lows. Quite a bearish 4 hour candle so far. This is an outside black candle. Keep in mind 112.50 is support. previous support here, previous resistance here. So 112.50 quite important for the market, and after that I would be looking a little bit lower towards this inverted head and shoulders neckline, acting as support, which comes at 112.40 roughly. So the next 10 pips, should be rather hard for the market to crack without any further statements or developments, on the press conference. But let's wait and see. So let's switch through the rest of the Euro person, have a look. Euro Swiss pulling a little bit back as well from what you see. USD Swiss actually had a spike lower from what you see, but it's now on the highs of actually at the highs of the day. Trying to push through parity. If we do that, what's a little bit higher, this ascending channels resistance and the 61.8, a little bit higher than that. As long as we remain in this channel, actually, I wouldn't be turning bullish in any way because, as I've said, this rebound so far has very corrective characteristics, nothing impulsive with it. So it is what it is. Let's have a look at the Euro crosses. Whoop. Let's have a look at the Euro crosses, Euro Aussie. Euro Aussie consolidating, as you see, we've broken below this ascending channel, but consolidating. This might be a triangle. If it is a triangle, then a resolution to the downside is quite likely. But in any case, I think, maintaining a bearish bias as long as we remain below 155, 58, 70 makes sense. But, a move above there would invalidate that point of view. This is Euro Kiwi. Blake was actually showing that on his chart a little bit earlier, and this is the pennant I was talking about. So this is likely a pennant. Of course, we need more price action to determine, but if this is a pennant, which seems to be one at the moment, it should be pointing to further gains. We've already seen this move. This move started when we actually broke above this descending channel. We had some nice divergences as well. So so far we stalled at this previous horizontal support resistance area, but the price action so far on this resistance seems to be corrective. So quite likely that we might resume to the upside. Let's have a look at Euro Pound. Euro Pound, I was viewing this as a potential diamond reversal. We've broken above this diamond if that's the case, but so far we haven't seen any real acceleration to the upside. So I would still, it remains quite choppy as you see here. So I would still remain very, patient with it because it can still, turn in any direction. There is no clear evidence of what it wants to do. Keep in mind that diamond formations can be either, a resumption, a continuation, or a reversal formation. So we need to be a little bit more patient because perhaps, this trend line is like this, in which case we haven't broken out of anything. But it does look like a diamond formation. All this expanding and then contracting price action feels like a diamond formation. Okay, let's have a look at EuroCAD as well. EuroCAD, quite mixed. We did break below this triangle. We did see continuation. That's already happened. But we never managed, to push through the previous low. And, so far this little price action here doesn't look like it's pointing to a reversal. So we might have more upside here, but quite mixed. It doesn't look any good. Okay, let's switch back to Euro USD. Some levels are breaking here. Okay, Euro USD paring back its losses now, so almost unchanged on this 4-hour candle. So let's see if the market is actually going to catch a bit. Let's see what the boons are doing, because the boons following this might be actually seeing some weakness, I'm thinking. Is this delayed? Doesn't say it's delayed. Okay. So,
asking you about gold, Steve.
okay, so Bund showing lower yields breaking higher. Okay, so let's see what's happening from here. We said that this move looked corrective, so we might push towards the highs once again. Of course, if that is to be the case, then if we indeed keep pushing towards the highs, we should see more weakness coming through for the euro, because don't forget that rates are inverted to the bond, so higher move in bonds means lower move in its yields. You asked about gold, Coach. Gold is actually doing nothing. It seems to be consolidating near this resistance area, just above 1300. So, if we get rejected from here, anywhere between here and the 61.8, fine, we might have one more push, lower. Now, on the other hand, if we break higher, which seems likely because the last, what is it now, like 2, 4, 6, 7 4-hour candles. So more than 24 hours, gold has spent consolidating in a formation that doesn't look bearish at all. So, if I had to bet just by looking at this short-term price action, I would say that perhaps, more upside in the short term before we decide what's happening from here. Silver weaker than gold, but still of the lows, obviously.
Can you show the gold silver ratio, bro? Just a
absolutely.
Curiosity. It's been a week or so since we've looked at it.
Absolutely. Some consolidation. If you see on the 4-hour chart, some consolidation as well. This rebound doesn't look impulsive, though. If we go to the daily chart and have a look at the gold silver ratio, here it is. You can see that. Okay, so perhaps this was. Yeah, if this was a triangle, we've already broken above it, but we're not seeing any any continuation, right? So, still consolidating here. If it wants to move higher from here, strong resistance up at 88. Now, on the other hand, if it breaks below 85, we open up the door once again for a move towards 81.
And and then we could call it a right shoulder if that happens.
Yeah, although the longer the time passes,
that's right.
The more we lose
symmetry. Actually, it looks like it could have one more pop for a third up there.
I think the best looking at the moment might be platinum in the short term, broke above this rectangle, seems to be pulling back. But if it finds support at 875, I think 875 would be an interesting level to look into buying the metal if it reacts properly from that support area.
So that's your preferred long. That's your preferred long now.
In the short term, yeah, absolutely. In the short term, if I had to be long one of the metals, I think platinum looks good. And this is palladium once again. Palladium in some kind of a consolidation, which can easily prove to be bearish. But even if this is a descending wedge, let's assume that this is a descending wedge for a fifth, for a fifth wave down. First of all, that would imply that after a rebound, we should have more weakness. Second of all, even if this is a descending wedge, it would imply that we should at least see one more push lower before higher. So in any case, I think
buy it down there.
Yeah, if it reacts properly, yes. And and if we also see more divergence after after a new low, why not?
That would be a textbook 3 drives to a bottom.
But in the short term, from where we currently are, I wouldn't be buying it for sure. I mean, I would perhaps be buying weakness. I'm still short 1/3 of my initial position, and I'm very happy to hold it. I want to see how the price action is going to unfold, but I quite doubt that we've seen the low. I very much doubt it for the time being. So I think there is going to be more opportunities to make money being short palladium, from higher levels perhaps, or even from this level, as I said, for at least one more low. As you see, copper still consolidating but this area just below 3 seems very, very hard to crack. I mean, on one hand, we had this bull flag, this potential bull flag that was playing out decently, but on the other hand, its inability to push through this 297 area is quite telling. I mean, it's like stuck, between support and resistance, and not doing much. So I would still favor a continuation to the upside, but the longer we wait here, being unable, retesting and retesting resistance and being unable to crack through it, the more the chances that something might go wrong, and we might actually turn lower. So I still maintain somewhat of a bullish bias, but I would be quite more careful. I would have loved to see that break higher quite earlier. The fact that we dipped lower and we pushed higher and now consolidating once again, this price action is taking too long to unfold, and I don't like that too much. Now, having to do with crude got rejected yesterday, but is that enough of a signal that a move lower is starting? No, that's definitely not enough of a signal. If anything, we still have a very nice bid on crude. I mean, we almost made it at 63.5, and since then we've been actually slowly drifting higher. So you need
Look
to
at that
expect
RSI reading at the highs that we made this week.
Yeah, the 4-hour RSI has hit 80 twice.
Yeah, so that's still a lot of momentum.
Yeah, there is still a lot of momentum, true. But as I said, I believe that anywhere between here and 66, crude should fail for at least a deeper correction lower.
What's at 66, Steve? There any fibs, or just is an important area looking left?
Horizontal support resistance.
Okay, I see
you can
it.
see it more clearly.
Yeah.
You can see it more clearly on the daily chart. Here it is. You see?
Yeah. Thank you, bro.
No problem. So
if you're
66.
not making Steve Volge part of your intelligence gathering to trade these markets every day, and Steve spends a lot of time in the chat room, but actually, Steve, I think most people could trade all day long with the ideas and your work that you show every day. Now, you change your mind sometimes between today and tomorrow, which is what we're supposed to do. And I know you spend a lot of time in the chat room.
If the market changes, we have to change our mind, right? I mean, being rigid is not a good idea if the market is suddenly sending you different kind of signals, right? I mean, you shouldn't be ignoring them just because you have a specific bias. So you should make a trading plan, and you should be rigid with following that plan, having to do with your safety net, which is your stop loss in most cases. But you shouldn't be rigid with your interpretation of the market if the market suddenly starts showing you or sending you totally different signals than the one you took into account when you decided to make a plan, right?
Yeah, my point being that if people are just coattailing ideas in here, they're not getting the whole picture, because things it's always reassessing as time goes on.
We're here just 1 hour per day, so yeah, there are 23 more hours. Absolutely.
So keep that in mind.
By the way,
go ahead.
By the way, we have a relevant question which has to do with USD SEC. I say relevant question because we know that USD SEC has a tendency of moving to the opposite side. I mean, it's quite strongly inversely correlated to the Euro USD. So as you see, more or less the same situation with USD NOK, meaning this was an important confluence of supports at 910. We held that, and as long as we're holding above that, I am, I'm forced from a technical perspective to be looking higher. So nothing really has changed having to do with USD SEC. I just covered that because we had a question. We also have questions. There's another question. If I'm still short gold, yes, I'm still short gold, but keep in mind that I've already booked twice profits on gold. I've booked 1/4 of it many days ago, and another third of it in profit near the recent lows.
See, so the people in the chat room know that, okay? The people in FaCe don't know that. That's the point I'm trying to make. Adjustment on ideas.
I said it again yesterday, but still, it wasn't when I did it. So yes, they didn't know in real time. Yeah, that's absolutely right, Coach. So yes, I'm still short. Roughly a little bit more than 1/3 of my initial position in gold. But that's a risk-free trade now. I've already booked profits twice, and I still don't have like hard evidence that gold has found a low. So I have no reason to change my plan, and no reason why not of not letting the last part of my position keep on doing what it's doing. Gold might push lower once again. I mean, it's not written in stone that it's going to move higher. So far, it's rebounding nicely, but it's not that it has actually invalidated any big levels. Now, we have also a question about USD INR, and I'll be more than happy to have a look at it once again. As you see, USD INR hasn't done anything since last week that we had a look at it. It's still trading within, in my opinion, what looks to be a corrective formation. Now, of course, it can push lower before rebounding higher because this little formation looks corrective. So it looks to me like it might have lower to go. Perhaps it's going to end up testing this confluence of supports where the 61.8% fib of the last bullish leg and this trend line meet roughly at 67.50 before higher. Okay, now having to do with our friend's question about the Nifty and Bank Nifty. Nifty, as you see, so far showing a little correction here, but price action looks really corrective. So I would have to say that probably there should be at least one more leg higher from here before seeing a deeper correction. This little formation here seems to be corrective. And Bank Nifty finally, you do have an interview today, if I remember right.
No.
You don't?
No.
Okay.
No show.
And Bank Nifty, same deal.
Life coach, like a life coach who doesn't even give. So I tweeted, "Let me coach you. If you can't make an appointment or choose not to, notify the person."
Indeed.
Think that's good advice?
Yeah, it's basic. It should be basic for any human, right?
Yeah.
But
anyway.
Yeah. Anyway, as you said.
I'm not going to have him coach me. That's all I could say.
Okay. So here it is. Bank Nifty still remains quite bullish, as you see. This can likely be a bull flag, right? So we had a wedge, which proved to be a bullish wedge, a triangle, a push higher in a very impulsive fashion, and this corrective move lower so far looks, as I said, corrective. So another push towards the 161.8% extension of this correction at 31,000 looks very likely to me. Crude, I already covered. Crude, you can have a look at the recording if you want. Crude remains quite well bid, but my point of view, if I want to be brief about it, remains that anywhere between here and 66, it should fail and produce some kind of a corrective move, a deeper corrective move at the very, very least. As you see, here's the daily candle, by the way, in Euro USD. So far, the daily candle in Euro USD is an outside shooting star, which is quite bearish, but it's still early on the day, so I wouldn't be jumping the gun here. But if the candle was to close like this, yes, it would be pointing to lower prices. By the way, the 4-hour candle that we were looking at has now officially closed since 4 minutes ago, and it was an outside black candle, quite a bearish candle. Now a move below 112.40, I think is going to open up more downside for the pair. So 112.40 is the level you should be watching if you want to be, or if you're long. I wouldn't want to see the pair slip below that area because, first of all, it invalidates this little inverted head and shoulders formation. Second of all, this is also horizontal support resistance area. And, this would open up the door for another retest of 111.80, and you know how it is. I mean, the chances of a double bottom are low. The chances of a triple bottom are even lower. The chances of a quadruple bottom are even lower than that. So bottom line, for every time you retest like a support or resistance, the higher the chances that it will actually fail. So, don't count on that. That's it, Coach. I think, we covered all questions. The rest haven't really moved since yesterday.
Yeah. Really, Steve, the best market roundup, I've been in it for 40 years. So anyway, tomorrow we'll have Peter Goodburn from Elliott Wave, WTI, and wrapping the week up Friday with at Real Dollar Fire and at Macro Hedged, Adam, well followed. So it's not how you start the race, it's how you finish it. So looking to finish the week strong with the team and two great guests. Thank you everyone for hanging out with us. And if you're welcome, Steve. And if you want to thank us, subscribe. And don't just count your pips, count your blessings. We'll be back with you tomorrow. Peter Goodburn, special guests. Adios, everyone. Good hunting. See you in the chat room. See what Blake is doing after ECB. Adios.